Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate expert Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
A survey found that 18% of new home buyers got their financing, at least in part, from the bank of mom and dad. Does that seem realistic?
No, it's not realistic. It's really, like you said, it was a survey, I guess, right?
Yeah,
a survey. This wasn't a factual data review, or you didn't compile a large database to come up with this answer. So what I will tell you is this: is that I would argue 75% of all first-time buyers get some kind of a financial benefit from someone else in their family somewhere along the line. Now, that financial benefit could be the appraisal fees covered off by a family member. It could be the moving costs paid off by another family member. In other words, they didn't have to use their own money that they were going to use in the down payment. They got a gift from somebody else that stopped them from cutting into that portion. What I think these surveys are saying, a lot of the talk is about, I'm assuming this one is this way, Jim, they probably make a reference to the bank of mom and dad. Is that a fair statement?
Well, it was a survey done by the CMHC. Excuse me.
So there you go. So here you go. This is your national insurance provider for default insurance for the banks, not for consumers. This benefits the bank. Once again, misleading the public by stating a stat, an opinion, a survey versus a fact. So, yes, most young first-time buyers will get assistance from somewhere in the other. What I'll tell you is that there is no data. There is no data to support that moms and dads are giving $50, $100, $150, $200, $250,000 as a down payment. The reason you know that is because that money would have to come from somewhere. In other words, if the parent wanted to borrow money against their own home to give to their kids so they could go buy a house, that loan would show up in the mortgage data for Canada. There is, in the same way that I was able to calculate the $10 billion that was missing in Vancouver because of foreign buyers, when we explained how the Ponzi scheme flip was working earlier this year, we know where to look in the data to find out if this was impacting the market. Are parents giving their kids $100, $150, $200,000 impacting the market? And no, it's not. What is happening is there may be an outlier. You know, you're going to hear some story about some mortgage broker who says, yeah, I've had two or three. Yeah, you may have had two or three people come in, but of the tens of thousands of first-time buyers, that is not the norm. Those are outliers. What we've seen in Canada over the last 10 years is that outliers become news headlines. And that's really where your problem is. So this survey, you know, of the hundreds of first-time buyers that I sold houses to over my career, I would go as far as saying virtually almost everyone was helped out by mom and dad somehow. The degree to what they were helping out is really the only thing that came into question.
We'll have more with Ross Kay right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Ross Kay. Ross, you have repeatedly warned our listeners to not believe a house price claim being made recently. I'm told you have some news in your efforts to protect the public from these news releases.
Yeah, Jim. So if you go back to previous airings here on these interviews, you're going to find that I have continually referenced how all of the house price indexes in Canada are severely flawed. The benchmark price used by the real estate boards, it's flawed, massively flawed. I'm not talking a small amount. It's so bad that it shouldn't appear in print, based on our interpretation of the data, not stats. The TerraNet National Bank House Price Index is the most dominantly used house price index in Canada. It is so dominant that it has been used to determine the loan-to-value ratios on the outstanding mortgages held by Canadian banks in their disclosures to shareholders. In other words, if a bank has $600 billion worth of mortgage debt or $300 billion worth of mortgage debt outstanding, they update their risk by stating a loan-to-value ratio that is updated using the TerraNet National Bank House Price Index forward sortation area. Sounds pretty good. It sounds pretty good until you understand how the methodology works, and that when all of these FSAs in aggregate come together and form a house price index for any municipality in Canada, that index simply mirrors the average selling price. It does not change. It has not changed since the day the index has worked. When you chart them on a graph, making sure that the timelines are aligned properly, it is a 100% correlation. We warned, which we mentioned here on your show in earlier episodes, the OSFI in Canada, that the Canadian banks should not be using those indexes. We explained on your show here earlier, months and months, it might have been a year ago by now, that those index, the methodology is flawed. I got a lot of pushback from people saying that I was wrong. Obviously, the OSFI did not think so, because today, which you are not reading in any newspaper in Canada, the TerraNet National Bank, HPI, 6-city composite has been closed off, shut down. Not only is it shut down, all the data that up until last week, every Canadian could go to their site and download and check if what I'm saying is true, has been removed. The 6-city composite has been removed. On May the 24th, I sent out a tweet to BNN, Greg Bonnell, telling him how the TerraNet National Bank, 6-city, HPI, had gone up 109%. I also explained to him that the average selling price across all of Canada, not just those 6 cities, all of Canada, had gone up the exact same 109%. That's how bad that data is. That's how bad that methodology is. It's so bad that the OSFI last year sent out a warning to the banks not to rely upon it. But in the intervening months, the 3 releases, the 3 quarterly reports, all of the banks have published since that time, they continued to rely to a Terranet National Bank update of their LTVs. I guess the OSFI has gotten even angrier, and a repercussion of that is somehow Terranet National Bank has now pulled their six-city composite. That six-city composite was used around the world by economists around the world to guesstimate house price change in Canada. The OECD has used it. Bank economists in Canada have used it relentlessly, as well as the 11-city composite for the last 5-7 years. Relentlessly. That's why all their information and all their forecasts are wrong, folks. That's why they think you can't forecast the housing market. You can't time the market, because they're using statistics instead of data. Everything that we've said in this show has just been proven to be true in this one move. The number one house price index in Canada, used by every economist, housing analyst, expert, non-expert, guesser, backyard, has been ceased, stalled, removed. Not only that, Jim, they have totally revamped their website. Not only did they get rid of the index and simply said, we're retiring it, and you can no longer get access to the data for it. I'm sure, again, there'll be hundreds of economists across Canada who have downloaded the data, so it's not like it's going to disappear. They now are also hiding the methodology and the percentage breakdown that they used to create the index for the 11-city composite. So it's not enough that they remove it, and they have not did a press release anywhere. I'm sure that they'll mention it somewhere in the bottom of their press release on Wednesday when they give an updated value that we're no longer using it. But every economist in Canada has used it. They've relied upon it. It appears in hundreds of charts issued by all of these people, including the Government of Canada, to make decisions on the taxes Canadian taxpayers are going to pay, to make decisions on housing markets. It's disappeared, folks. Go to housepriceindex.ca. That is their website, not mine. And you will see it's been totally revamped. You no longer can get access to the sixth city. You no longer can get access to their data for the sixth city. The methodology for the 11th city has been hidden, and the breakdown for each of the cities in the 11th city has been hidden. Anybody who thinks it's a conspiracy theory, it's wrong. This is simply the National Bank and Terranet, which is owned by OMERS, by the way, the Ontario Municipal Employees Pension Fund here in Canada. They own Terranet. They are worried about their own corporations being destroyed in this fraud. People have been conned, as we have said on your show now for 2 years. Don't believe house price indexes, benchmark prices, real estate board prices, prices released by realtors. Don't listen to them. Because if you did, you're getting the wrong advice. That's what the destruction, the killing off of the six-city composite has just proved.
So how inaccurate was it, and where have we been misled, and what should people believe? Okay, so, again, they took the 6 cities that they were using. They were claiming the average, the price of homes in those cities had gone up in combination 109%. The exact same thing that all of the houses in Canada that sold went up 109%. What that means is it means that this is house price illusion. This is no different than no one telling anybody out in British Columbia, your average selling price is down $100,000 in the first third of the year. Nobody told them that. It's because they use seasonal, and then they use seasonally adjusted numbers. As I've said on your show, you can't use seasonally adjusted numbers when it comes to housing. It does not work because the trading cycle never follows a 12-month period, and it doesn't follow a seasonality at all. So it defies logic that they're using. Our current cycle is now into its 49th month nationwide as a national cycle. 49th month. That has never ever happened in history.
It's actually 3 times longer than the longest one that has ever lasted. That's how you get these crazy house price gains at the end of a cycle. People believe the Terranite National Bank House Price Index because their bank tells them it's true, the government tells them it's true, the newspapers tell them it's true, they all tell them it's true. Yes, oh yeah, these houses have gone up 30%. It is a lie, folks. I'm not saying that there isn't someone foolish enough to believe all this, to walk out and pay 30% more for a house than they're supposed to pay. I watch that happen every single day when we're looking through our sales data. We see this happen every single day. And that's what creates house price illusion. So one house sells on a street of 20, and everybody thinks that all 20 of those houses are now worth that much more money. The bank will lend money based on what that one house sold for. The crazy fact that someone paid 30% too much for the house. This is why we go back to house prices, every single house price metric outside of our own, released in Canada today, is a buyer side metric. It can be used to track what buyers are doing, but it cannot be used to track house price gain. When you look at the GTA, when we look at the GTA, and when we're looking at the market, we see that year over year in the city, in the GTA, the stats released by the Toronto Real Estate Board. In May, the average selling price, which they report, actually means nothing because we break it down into first-time buyers and trade-up buyers. We know that trade-up buyers in the GTA, the entire GTA covered by every single sale reported by the Toronto Real Estate Board, actually only went up 6.96% year over year. Only, not even 7% year over year. But everybody thinks housing prices are up 20%. It's a myth. The buyers who are buying are simply higher qualified buyers. They have more money to spend, so they're buying more expensive houses. It automatically raises the average selling price. None of these metrics count the first-time buyers, which you just talked about in that other report by CMHC in that survey. We know how to count first-time buyers, and that is one of the most important metrics when you're reading a housing market. So if someone needs to hear the truth about what their house is really worth, they have to know someone who can calculate that number. And in North America today, there is only one source in any municipality in North America who knows the methodology to count first-time buyers. And the only place that can be done is in Canada, and the only firm that's doing it is my firm.
So what is your first-time buyer data telling you? Well,
and again, we don't ask anybody to believe us. The whole premise of the Wealthy Homeowner Program, the program that we're supplying insight and data to, it is based on giving people the facts and letting them be able to go out and vet them. Let them go out and check. So when we're making a statement about first-time buyers, there are probably there are 3 or 4 other sources any given month where you could check what we're saying. We won't tell you those sources because that is our IP. That is proprietary. If we just handed this out, everybody would know how to do it. But we'll tell you once a quarter, you can check if we're telling you the truth or not, because all you have to do is pull up CMHC's own quarterly publications. They're always stale dated by 3 months, so our members are not impacted by this checking it out. And you can go there and you can say, they'll show you what's happening with the number of high ratio mortgages that are loaned out. Now, I'm talking about the ones that are 90 to 95% loan, 5 to 10% down. Those are universally first-time buyers. So when you see CMHC's data drop from 18,000 people taking out those loans to 11,000 people taking out those loans, you know that it's dropped up from 18 to 11. So here's a question for you, Jim. If there were 10 homes that sold, and 2 of them were first-time buyers, and the other 8 were to trade-up buyers, in other words, people who had already owned their homes for 10 to 15 years, there were 2 first-time buyers one month. The next month, there was only 1 first-time buyer, but there were 9 trade-up buyers buying more expensive houses. Wouldn't that automatically raise the average selling price simply because there was 1 fewer person purchasing a cheap house? It's like going to a GM dealership, and one month everybody buys Cadillacs, and the next month everybody buys a Chevy Cruze or whatever their entry models are now. Of course, it's where the buyers are paying that matters. So you can check first-time buyers, and once you know that number, you know how much the average selling price is being skewed that month by that one component. Then you have to take regional differences, community differences, the houses that are being purchased. And when you aggregate all of those variables into one number, then you know what the real house price gain is. Zillow will pay me $1 million right now if I go down there and tell them what I know. They have a contest down in the United States. All your listeners can go down there and check it out. It's called the Zillow Prize. They'll pay $1 million to anybody who can show them how to create a house pricing model. The reason they pay $1 million is because nobody in the world could do it. Obviously, if they had a methodology that worked, if the Terra National Bank methodology worked, they wouldn't throw away $1 million. If the Case-Shiller Index down in the States, the fellow that won a Nobel Peace Prize, or a Nobel Prize for Economics, if his index worked, they wouldn't pay anybody $1 million. They'd simply copy it. They don't work, folks, because these people don't understand all of the variables, all of the components, all of the factors that impact the housing market.
So, Ross, when are you going to collect your $1 million?
When you can do something that everyone else in the world, for some strange reason, says is impossible. They say it is impossible to time the housing market. Did we call Calgary 2 years ago?
Yep.
Way before the oil collapse happened. Did we call Vancouver? Months and months before anything happened, before anybody was even talking about tax. What calls have we made in the GTA right now? Can't tell you.
Ross, if you're a bank stockholder, what does this release mean that they're not publishing these indexes anymore?
Okay, so this is a serious topic. When it comes to house price confusion, it's all serious, but this one is even more serious because of the potential consequences. So we know what happened with the Home Capital Group when Mark Cahote's, the short seller, decided to put that in that company between his crosshairs and has gone at it. And he still is going at them today over and over and over again. Even though some people have reaped a good profit by realizing their mortgage book is okay to a certain degree. In other words, it's not like the company's worthless. But that was on just one case. Now he is expanding his conversation into the greater banking space. Now, he's already been proven right on Home Capital Group because Home Capital Group, the social media constraint happened and really hammered. What happens if this happens on a Canadian bank? Canadian banks have been using the Terra National Bank House Price Index on the forward sortation breakdown, so it sounds even more legitimate to produce loan-to-value ratios to the shareholders that implies a certain the amount of risk. You know something? The British Columbia ones have not dropped, folks. So even with using just the British Columbia Real Estate Association's own data, published on their own website for the first third of the year, where it says the average selling price has dropped $100,000 in British Columbia in the first third of the year over year. There's been no drop in the loan-to-value ratios at the banks who have mortgages in British Columbia. That's over a 12% decrease in average selling price. that is not reflected in the bank's stock. So they're claiming, let's say that they're claiming, oh, this guy has 80% loan-to-value ratio, and it hasn't adjusted for the 12% price drop on average. So even just using the average, all of a sudden, now there's only 8% equity left. That's what's called a high ratio loan. But all of the shareholders believe it's a low ratio loan. So this is the problem that the banks could get into. They are also potentially getting into this problem at the same time that their earnings in Canada are going to start dropping because of what we call mortgage rollover. So that's something, another term our firm uses. We read the Canadian Bankers Association's data every month. We compare that against our own mortgage data. We compare that against the Bank of Canada's mortgage data. We compare that against the sales that are taking place, both in the new home sector and in the resale home sector. We put all of that together and we look at where the money's coming. So we know that bank profits on mortgage financing are going to stop decreasing for a specific reason, which I'm not going to talk about here on the show. Their profits are going to start declining. Okay, so their profits start declining. What happens if a short seller, like what happens if this news, Teranet National Bank has shut down their 6-city HPI and they've removed all their data? What happens if that becomes the focus of the public mindset? What kind of a run could that put on Canadian banks, especially in today's world of social media, where you can get a message out very quickly and where confirmation bias or belief bias dominates your followers? There's the problem that you're into with Canadian banks. And I think what you're going to see work out over the next 12 months will be very interesting because of that factor. I hope the government continues to put pressure on people, like forcing Teranet National Bank house price, the 11th city, to be debunked. The benchmark HPIs need to be debunked. Everything that's talked about real estate needs to be debunked. And the consumer needs to be told the truth. If that doesn't happen, I don't know what the outcome's going to be.
We'll have more with Ross Kay right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, the Bank of Canada released its financial system review, which included a large portion dedicated to housing. Have you seen their news release, and do you have any opinion about it?
Yeah, we spent actually a lot of time over the weekend going over the release. I think it came out on Friday. Might have been Thursday or Friday. I don't know. We didn't get around till the weekend. It had a big section on housing. So that's why we were focusing on it. I'm not expert in the banks. I'm not an expert in stocks. I'm not an expert how you short. None of that stuff. Even the economy. I'm not an expert in that. I'm an expert in one thing alone: housing, home ownership, and housing markets. That's what I'm an expert at. So we look at our data compared to what the Bank of Canada put in their FSR on Friday. We also noted that they, once again, foolishly cited some little tiny real estate brokerage in Toronto, who I don't believe even carries 10 listings. I mean, we're talking this little tiny firm with some guy who got his broker license, who doesn't have decades of experience. And the Bank of Canada believed this guy's calculation of cap rates and his calculations on when single detached homes were selling in the GTA and how quickly they were being rented as a sign of an investor. So investors, first of all, we say cap rates. What are you doing talking about cap rates in 2017? Cap rates have nothing to do with real estate investing in a low interest rate environment. That is the stupidest thing I have ever heard. We have wealthy homeowner members, okay, and on the investor side, they're purchasing properties knowing that even if the house doesn't gain in value, they're going to have an 8 to 12% return on their money because of the way they're investing in real estate. It has nothing to do with cap rates. Cap rates go into this assumption from the 1960s that some local grandmother in a town would buy a house and rent it out to some local family, and she would get a return on the full value of the home that she owned. Ridiculous. You can't even look at those type of calculations when interest rates start to drop below 6%. But that's what the Bank of Canada did in their release on Friday, which is the same way these real estate networks, investors networks that you hear all about. That's how they talk about real estate. Everybody wants to talk about cap rate. You guys aren't commercial investors. Commercial investments are cap rate. Residentials are not in 2017. They haven't been for the last 8 years because you make money off them in different ways. Anyways, long story short, that was in there. You had some local broker coming up with some idea, and then the bank actually cited him in this review about that topic. They also have charts where they show how they're bragging about the drop in high ratio mortgages. So they've got these charts which shows, I think they have 11 cities or 10 cities plus the Canada, and they're saying how high ratio mortgage, the percentage of new mortgages that are high ratio has dropped, and that's a great thing for the country. And what I say is, guys, how do you think you get a 30% house price gain? The only way you get these crazy house price gains that have never been recorded before in the history of any city in Canada is because there's no first-time buyers buying. They're misinterpreting their own data because they don't know how a housing market functions. They're bragging about these low numbers of high-ratio mortgages, when in fact they should be explaining to the public, okay, this is what this means. That means the house prices at the real estate board, the benchmarks, the MLS HPIs, the Terranet National Bank HPIs, they're all skewed right now. You can't believe them. Of course, they didn't say that. They went on to say, this is a sign that we have low risk. I'll tell you from our perspective, I believe that a first-time home buyer in Canada today has a lower risk threshold than someone that has 25% down. Because home ownership data shows that to be true. Apparently, the Bank of Canada doesn't believe it. So they're virtually about 75 to 80% of that FSR, their commentary in the housing market is what we would call ridiculous, and it's just full of economists. And if we were to sit down with them, and they were gracious enough to ask us in, we would sit down and show them exactly how they're wrong. They could bring in 100 economists to argue with us. We would just simply point to the data points and said, sorry, boys, argue that.
Ross, always fun chatting with you.
Hey, same here, Jim.
My guest has been Ross Kay, a real estate expert. His company, rosskay.com. You can check out his website, thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. If you have any questions for our guests or for the show, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.